Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin roundup to discuss the current market conditions. We're going to try and gain some insight into Bitcoin's recent price action and how we should consider positioning ourselves going forward. We'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, we're just in the middle of December, and as we can see, Bitcoin's price action recently has been somewhat boring, especially given how volatile the end of November was with the FTX collapse and the subsequent drop that Bitcoin experienced. After that, we have since kind of been in a period of consolidation and general market indecisiveness after this large downward move. So realistically, in terms of percentage gains or losses over the past few weeks, nothing really too major, but overall, in terms of the current market cycle, we are definitely still within a bear market, but potentially within the tail end of a bear market. There are actually a few other things we can look at outside of Bitcoin and cryptocurrency to try and gain some insight. So if we look, for example, at the DXY, which is the US dollar currency index, we can see recently over the past few months, this has actually been on a quite stark decline, especially after a monumental uptrend that I experienced for multiple years. We have since dropped fairly substantially. This is just showing the underlying strength of the US dollar as a currency. And as we generally compare Bitcoin to the US dollar, when the US dollar is increasing in strength exponentially, Bitcoin has a very difficult time to increase in price. And on the contrary, as the US dollar starts to decrease in strength, this is usually a bullish sign for Bitcoin, but unfortunately, just due to the fundamental factors that have happened within the cryptocurrency space, this hasn't really come to fruition yet. Although if we look at more traditional assets such as the S&P 500 and just equities in general, we can see they've had a very strong rebound to the upside over the previous few weeks. Now, this isn't necessarily to say that we're out of a recession, the bear market's over, because quite clearly the trend is still to the downside, but it is somewhat promising that there is potentially some bullish news and price action going on across other markets outside of cryptocurrencies. It actually gives us a little bit of hope that once the cryptocurrency markets have overcome its current issues, maybe there can be some bullish price action to come, especially if equities continue to increase and the dollar strength continues to decrease. But for now, as I said, price action has been relatively neutral and not a lot to write home about, unfortunately. So if we look at some more on-chain and fundamental metrics that we have on lookintobitcoin.com, such as the fear and greed index, we can see the general market sentiment has once again become extremely fearful. Obviously, after a dip from above $20,000 to $15,000, $16,000, depending on exchange, a lot of investors are very fearful at the minute. And obviously, this has been the case for a little while now. It is worth noting that historically, areas of extreme fear have generally been decent areas to accumulate, but we have been in a period of extreme fear for an extended time now, so it's not always best to just blindly accumulate as soon as the market is fearful. We need to have some indication that we are closing in on a market bottom, or at least the capitulation and consolidation phase has ended and potentially entering a new bull cycle to really maximize our risk-adjusted returns. So we have actually mentioned it a few times recently, but the hash ribbons indicator, which has recently just flashed to the downside, is a good metric we can look at to try and time the market a little better. As we can see, we've just had this cross where the 30-day hash rate moving average has dipped beneath the 60-day. Historically, this is more of a bearish signal, but what we can see is once that 30-day moving average crosses above the 60-day, once again, this blue line crosses back above this purple line, and this shaded background area goes from a green or orangey color to the white color. This is a hash ribbons buy signal, and historically is one of Bitcoin's most accurate and reliable signals. So this is definitely worth keeping an eye on, especially over the coming weeks and potentially even months, as miners continue to capitulate and turn off their machines just due to the bearish Bitcoin price action. This may be actually a good area to take advantage of some discounted BTC. And finally, if we go into the net unrealized profit and loss, or the NUPL chart, we can see we are still in the area of capitulation. If we just zoom into the current cycle here, we can see we actually did try to break out of this capitulation area, but after the dip from the FTX insolvency, we have once again dipped considerably lower and will likely remain here for a few more weeks, if not months. One very interesting thing that I've taken note of, though, is if we actually connect the lows of each of the previous NUPL cycles, we can see that this actually lines up pretty nicely and can show potential bottom being formed with the current price action. We can see as far back as 2015 and including the dip in 2018 into 2019, right now on this line of support here, Bitcoin has actually bounced, which may show that investors are watching the NUPL, or the net unrealized profit and loss, to try and gain some insight on when may be the best time to deploy more capital into Bitcoin and the cryptocurrency markets. Now, the NUPL is taking into account the market cap and the realized cap. So the realized cap is the cost basis, or what some may call the true fair value of Bitcoin, by taking into account the last transactional value of each Bitcoin when it was moved on the network. So I like to refer to this as the network utilization value. And once the market cap is significantly beneath the realized cap, this shows that on average, people were accumulating Bitcoin at considerably higher prices than we currently are at. And this usually is a good indication of capitulation when a majority of Bitcoins are currently being held at a loss. So this is another one you should definitely keep an eye on. It may not be worth, again, going all in right now. I, for one, am drip feeding into my portfolio and dollar cost averaging in at these prices. But for a more conservative strategy, you may want to wait until we actually leave this capitulation area and enter the hope or fear phase of the cycle, which would be a more confirmed trend change for Bitcoin and the cryptocurrency markets. So just to summarize, following our large downside move in the tail end of November, Bitcoin is currently in a period of consolidation and choppy price action. We have seen some minor capitulation, and as lots of holders are currently at a loss, this is truly the definition of a capitulation phase for Bitcoin. What we can also see is traditional markets have had a very strong rebounds to the upside, and this is mainly due to the decrease in the US dollar strength, but ultimately there are still discussions regarding inflation and interest rates, so it's definitely worth keeping an eye on fundamental factors too, as that could all change very quickly. What we can see is Bitcoin remains at levels that have historically been considered oversold and have been grey areas for strategic investors to accumulate Bitcoin for the upcoming cycle. Of course, this is up to your personal risk tolerance, and nothing can be ever assured. Everything has to be accounted for, and more downside is of course possible. But right now, if we're just going off historical averages, it doesn't seem a bad place to consider maybe picking up some sats. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And don't forget to comment down below your thoughts on the current market cycle. I look forward to reading and replying to all of them. Have a very Merry Christmas. Thank you all so much for watching, and I'll see you in the next one.